Small businesses are flashing more early-stage credit stress than larger firms, but their late-stage performance? Surprisingly resilient. Welcome to the Commercial Pulse Update for August 25th, 2026. The Experian Commercial Pulse is a bi-weekly snapshot of the US economy and what it means for small businesses. We hope you find these bi-weekly updates insightful. Remember to hit subscribe to continue seeing us in your feed. Starting with the labor market, July unemployment fell to 4.1% from 4.2%, the lowest since June of 2025. Average hourly wages hit $32.40, though wage growth is slowing. But the economy also shed 23,000 jobs in July, on top of a downward revision in June. Inflation eased. Headline inflation is 3.4%, core inflation 2.5%. And small business optimism climbed to 99.8, its highest since January this year. Consumers don't share that optimism though. Sentiment dropped to 51.0 in early August, down 7.6% from July and 12.4% from a year ago. Retail tells the same split story. July sales were still up 5% year over year, but down 0.6% from June. First monthly decline since October of 2025 and the largest since May. Strip out gas and autos and sales still fell 0.2%. Stable economy, slowing momentum, and that's the picture lenders should be watching. Meanwhile, the small business population keeps growing. The SBA counts more than 36.2 million small businesses, up 18% since 2019, and formation is still running hot. A record 579,000 new businesses launched in July, up 8% from June. Since July 2020, 454,000 businesses have opened every month on average, 55% above the pre-pandemic pace. But the kind of business matters more than the count. In early 2026, 93% of new businesses were sole proprietors, up from 85% in 2018. That shift is showing up in lending. Businesses under 2 years old now make up a bigger share of newly opened commercial accounts than before the pandemic. Translation for lenders, the small business credit population itself is changing. And these businesses are under real operating pressure. Labor quality is the top reported challenge, up 5.4 points year over year. Inflation is running 6.8 points above its long-run survey average. It's surfacing in credit too. Experian data shows small businesses consistently run higher early-stage delinquency than larger firms, and that gap has widened in recent months. Read that as near-term cash flow strain. But look at late stage. Despite the early stage stress, 91 plus delinquency for small businesses is comparable to larger firms, and that gap has narrowed over the past year. Business cards, same pattern. Early stage delinquency runs slightly higher for small businesses. Late stage moves in near lockstep. Leases break the pattern. Small businesses carry higher delinquency early on, and then late at the separation is widening. They're also pulling back on new credit. Commercial inquiries among small businesses sit below larger firms. But utilization is climbing. By May 2026, small business card utilization ran 2.4 points above larger firms. For chief risk officers, the takeaway isn't simply that small business risk is rising, it's that the segment is being reshaped. Younger, thinner staffed, cost pressured, and leaning harder on commercial cards for day-to-day cash flow. Those are early warning signals. But they haven't shown up in late-stage delinquency yet, so don't read any single metric in isolation. Watch early-stage delinquency utilization and young business performance move together. For now, the data supports steady monitoring, not broad policy changes. And there's much more in this week's Commercial Pulse report. For a deeper dive on industry insights, reach out to your Experian account team. And if this update was helpful, please like and subscribe to support our channel. Last, remember to keep informed to stay ahead. and I'll catch you on the next one.